Every economic era has its own unique characteristics, but right now we are rewriting Econ 101. I think we're all going to get new lessons in how economics work in the modern era. There's a ton of mixed data this morning, but on balance, it actually isn't bad. Unfortunately, Fitch is back, and that seems to be the focus, although CNBC would have you think otherwise. This is Randy Kirk. Hit the like, hit subscribe, hit notify, and of course, join Patreon. I want to just get right into this morning, but I do want to tell you, you need to watch Larry Goldberg later today. Hit notify. Be sure to don't miss the Larry Goldberg episode. It's going to be incredible. He's going to lay out a completely new, a case for a completely new era in the automotive business based on Tesla as the leader in all aspects of automotive technology and manufacturing. It's unbelievable. You just can't miss it. All right. So be sure to see that. So Tesla started out doing better in the markets this morning with good numbers coming out of China, but the Dow is down sharply, the NASDAQ not as much, and Tesla's all over the place. And in fact, everything's all over the place. Who knows where it's going to end up? I'll let you know before we finish this episode exactly where things stand, but everything's bouncing around because, as I said, the data is everywhere. So Fitch, we of course heard from Fitch a couple of weeks ago when they downgraded the entire US economy, and that was a big blow to the bull market that was going on. It's a big blow to the Goldilocks analysis that we had been making and others had been making, and that has continued to weigh on us. But this morning, Fitch has warned that it may have to downgrade the entire banking industry due to credit risks associated with these high interest rates. They said the biggest issue is the Fed continuing to rise, the interest rates and the related potential for defaults by various banks' customers. To rub salt into the wound of this idea, any decrease in the credit rating, in the general credit rating about the banks as a sector would cause them to have to downgrade even top banks such as JP Morgan and Bank of America, since their ratings cannot be higher than the category as a whole. So this is not good news. And as far as I'm concerned, that's why markets are down this morning. So on the other hand, retail sales beat by a bunch, and then Home Depot beat top and bottom lines with a rosy report on inflation. But they had a less than rosy outlook on their total sales revenues in the second half because they said their buyers, because they said their customers are not buying the large discretionary items. On the other hand, they said their buyers are not getting as many increases in prices, giving us more ammo with regard to inflation being down. So they're saying that buyers are not buying these large discretionary items either because they bought them during the pandemic, or they don't want to buy them now, and or maybe both. They also don't want to buy them now because of high interest rates. But the overall retail sales numbers came in very strong, showed a seasonally adjusted increase of 0.7%. That's 8.5%, on an annualized basis, rather than the 0.4 the Dow Jones was expecting. Excluding autos, sales raised a robust 1%, which was much higher than the 0.4% forecast. 1% for the month, 12% annual increase. I have a suspicion this will be rewritten later. I don't think this is going to hold. I think next month they will adjust this, but who knows? But those retail numbers would have been stimulating in this market, but for Fitch, in my opinion. So, but their reporting also echoed the Home Depot statement saying that large items like furniture and appliances were not doing as well. In fact, we're lower month over month. More good news on inflation, which, if true, would keep the Fed from raising more and from Fitch having to downgrade. Brent Meyer, the Atlanta Fed's assistant vice president and chief inflation watcher. I don't know if he's the chief inflation watcher for the entire Fed or just for the Atlanta Fed, but what he said was this. This is a quote: "A rising share of goods, currently about 18.3% of the CPI basket, is now in what he called an inflation sweet spot, with prices increasing between 1% and 3%. He goes on to say, if you watch this program on a daily basis, you will not be shocked by his next statement. assuming that shelter cost inflation continues to fall, the share of goods where prices are rising more than 5%, which is presently about 30%, 38% of the basket, could be more than halved. So we'd be down to only 17% of the overall basket that would be showing increases outside of the range. And of course, you know where those are right now. It's all in oil and oil related. He added that inflation for services, less energy and shelter costs, known as the supercore. I have to tell you, I've been watching all this stuff forever and ever and ever. I've never heard of the supercore. Okay, the supercore is an area of particular concern for the Fed. I have never heard that before. Has, by his calculation, been increasing over the past 3 months at just a 2% annual rate, already meeting the Fed's requirements. I added that. Since CPI inflation tends to be faster than PCE measures that the Fed uses to set its inflation target, that means one important area of policymaking focus may have dipped below target already. So this would be incredibly good news, and it should be news that the Fed already knows about and should allow them to make some dovish statements. Okay, now we got a little bit bad news. Empire State manufacturing numbers were down again yesterday, substantially. I'm expecting manufacturing to turn. I think next month we'll see a turn in manufacturing. Why? Because what you're hearing is retail is up, inventories are down, manufacturing eventually has to get into gear. So I'm thinking this is a transitory. I think this will not be an item that we'll be looking at in the next couple of months as a problem. Bank of America and BlackRock both issued rosy reports about future inflation, jobs, and GDP. So, like I'm saying, pick what you want to pick. I know what I'm picking, and let me summarize that right now. Inflation is dead. It's over. We're not going to be seeing inflation. Oil would have to get over 100. Commodities like wheat and others would have to start raising up. Inflation is done. There's nothing to indicate that we're going back into inflation. Even if oil went to 100, I think we would still be at 2% or less. So these folks, Bank of America and BlackRock, both saying they think of inflation is also dead. I think that jobs will continue to be fine. And I think we're going to have not just a soft landing. I don't think we're going to have any landing at all. I think retail will continue to be fine in the United States. Around the world, not so much. But the GDP, I think, will be fine. And all these guys are saying exactly the same thing. BlackRock said they are looking at full employment stagnation. So they think for the next 18 months or even longer, we might be looking at a GDP that would be less than 2%, but we would have full employment. So now let's go to the international. Russia raises its interest rates to 12% as their economy is completely out of control due to their own stupidity. And China lowered their interest rates in an effort to stimulate their badly flagging economy. And yeah, you could say based on their own stupidity. So are you beginning to see why I'm saying this morning that we're getting an absolute MBA level lesson on economic, it's crazy. So with this crazy set of data, the experts are trying to make decisions about how to invest. B of A says the second leg of the bull is a go. They recommend more risky stocks in this leg. They didn't mention Tesla as one of their picks for that strategy. In the week ending August 13, 2023, Tesla China saw 14,000 insurance registrations. That's up 9.38 from the previous week's 12,800. And for context, Tesla China saw 10,600 insurance registrations in the week ended July 30th, 2023. So this would say that would reverse any consideration or worry about Tesla lowering prices yesterday in China. Considering the results of the week ended August 13, Tesla China appears to have a total of 25,000 insurance registrations in the present month so far, as noted by the Post, the CNEV Post. This bodes well for Tesla's third quarter results, as Giga Shanghai seems yet to focus its entire resources on the domestic auto market. So in other words, they're not even focusing on the China market yet. They would still be sending some of their stuff overseas into all the other export markets. So put some salve on the wounds of the price cut from yesterday. There doesn't seem to be a demand problem for Tesla in China. Well, Inside EV is reporting that the 2023 Tesla Model S Plaid recently introduced in Europe, achieved an exceptionally good result in the Moose test conducted by KM77.com in Spain. The top-of-the-line Tesla Model S was equipped with a yoke instead of a typical steering wheel, 21-inch wheels, Michelin Pilot Sport 4. I don't know. I'm sorry, I'm not going to read all that. According to KM77.com, the car was able to successfully pass the test, the Moose test, going through the cones at high speeds, at an initial speed of roughly 51 miles an hour, which is one of the best results ever. The slalom test, which proved that the 2023 Tesla Model S Plaid has exceptionally good handling. On that test, the car completed the test in 21.8 seconds, which is only 0.3 seconds behind the Porsche Taycan and faster than any other BEV tested so far. So number 2 in the slalom, number 1 in the Moose test. So Tesla now has offered a brand new Model S and Model X. They've dropped the price. You can get a Model S standard range now at just $79,000, a Model X at just $89,000. That starts to get tempting. Give me your thoughts. Give me your comments on this. Also, Tesla is recruiting a local operations team to bring full self-driving to China. A new report said, you don't do that if you don't think you're getting close to a breakthrough. They've hired about 20 people over in China to start organizing the FSD effort over there. Oil started out a bit down this morning, and that's probably China related, although the dollar was also down. So that oil drop is even a little more pronounced, because typically if the dollar is down, oil would be up in response. The 10-year bond is up, but less than you might think, given Fitch. The 2-year is down, and that reversed yesterday's surprise increase in the inversion. So we're continuing to see the reduction in the inversion that we've been seeing over the last month or so. The 10-year is still not over that 4.25 level I suggested that you keep your eye on. So this morning, CNBC thinks the China news is why the market is dropping. I think it's Finch. What do you think? Give me your comments on all this. It's a crazy, crazy morning. I could use your help. Tell me what you think is going on. Now, let's take a look at where we are here as everything is so scrambled this morning. We have the Dow down 212. We have the NASDAQ down 52. We have Tesla down 249, but now headed back up a little bit. All of the Magnificent Seven except Microsoft are down. All of the Cathie Woods are down. Let's see here. We've got a continuation of bonds. 10-year is now actually down just a tad. That is shocking. That could turn the mood of the market a little bit. The 2-month is up, but only slightly, and the 2-year is down strongly. Well, there you go. In 10 minutes, everything changed on the bond market. What else are we seeing here? We're seeing that the crypto is flat. The dollar again is down just slightly. Gold is down another 10. It's down to 1933. Oil is in fact down to 81.40. That is really good news. I'd like to see that continue. That would be really good news for the entire story. Oil dropping under 80, maybe going back in the mid-70s. That would be massive news. So watch that one carefully. All right. Be sure to see yesterday's episode with Scott Walter. Here's that card. We were talking about Optimus, and you know how much I love to talk about Optimus. And then last evening, the report I did with Brian White about the upcoming, Cybertruck, the handover of Cybertruck. You want to see that one as well. As I mentioned earlier, coming up later today, you've got Larry Goldberg in the spotlight, and he has got an announcement that is going to blow your mind. So you want to make sure and see that. By the way, on those other two, I will put cards up about the two from yesterday. Please hit like if this was at all valuable to you this morning. Please hit subscribe and notify if you want to be sure and see Larry later today and be reminded about that. And then be reminded, if you're getting some kind of value out of this on a daily basis, it would be really nice to have a few of you jump up there and try some Patreon. It's only $5 a month. Right now, you get 7 days free. try it out, see some of the unique content that I've got up there, and also get yourself a book, get yourself an audiobook. Pick any one of the four. If you get in at the $5 level, you can pick 2 out of the 4 if you get in at the $10 level. So come on now, join Patreon. I'd really appreciate it. And then we'll watch the rest of the day and see what happens. Holy mackerel, what a crazy day. And of course, as always, it's been great talking to you.